What's going on, everybody? Michael and Coco here. You're watching the Daily Stock Market Brief Show. Today's episode is a weekly recap and monthly recap. So we're going to go into more detail, bring in more charts, and get in just a little bit more depth to forecast what to expect here coming in the month of May. Now, before we hop into today's episode, I want to take a moment to thank the patrons that support this channel. Your donations and your support means the world to me and Coco. She gets extra treats because of it. Say thank you. If you're interested in looking on what I offer as being a patron that supports this channel, I have a link in the description below. Let's go ahead and hop in to today's show. Sell in May and go away, the saying says. Is it going to take place? Are we going to get a sell-off, a monster crash? Who knows? But in today's episode, we're going to be putting together a forecast and giving you a good idea, what I'm expecting to take place in May. Now, I'm just one market participant out of the hundreds of thousands, even more maybe, right, that are actively trading, investing, etc. So take note of that, okay? Context. But I'm going to be showing a lot of charts today, and I'm going to kind of give you reasons as to why I think that the month of May is not going to be all that great. Not necessarily like it's going to crash and burn, but I think it's just going to be a very frustrating month. Now, typically, when it comes to seasonality, the month of May is rather calm, right? From a relative performance, if you look all the months, May is typically one that is relatively flat to up, right? So I'm going to be kind of walking you through a lot of charts and a lot of things that I see that make me believe that the month of May is going to be rather a boring month. However, there are a lot of signs that we're in this crack up boom, this melt up phase. So we must be prepared if the market wants to continue to move higher. So you'll probably notice if you're on my Patreon, I only show long setups because I want to be able to take advantage of the market's move, and the current momentum is in the bull's favor. Okay, so we're going to start off looking at the dollar here and going into this. Now, if you watch my daily episodes, you probably hear me talk about the dollar and the correlation to the S&P 500. If you're new here, well, first off, welcome to the channel. But just bear with me here, and I'll try to reiterate some of the key things. Now, I want to look at the dollar from a seasonality perspective because this is very important. This could be very well going to the saying, sell in May and go away. All right? Look here on the US dollar index future seasonality chart. We're looking back 20-year range. We see this just big fall down into the month of April. All right? Well, typically, you also see from a seasonality perspective, April being a very strong month for equities. Okay? And we saw that in April. April was a huge month. And we'll go into those charts. Okay? We're looking at long-term charts here, monthly time frame, weekly time frame, daily time frame. Okay? I'm going to try to get this moving because we have so much to talk about. I want to pay attention here. May, seasonally strong for the dollar. That to me says, okay, be very careful here. Why? Be careful. Well, from a daily perspective, okay, April, the dollar plunged. Not necessarily plunged. I mean, still relatively, in a basing pattern, but still, it went straight down. Month of May, bam. Okay? S&P 500, boom. Shot out of this little pattern, ripped higher and higher. Look at this last day, going into May. That's a big green candle, waking up. And I had a feeling that we'd be seeing some sort of bounce here soon. That right there is a big candle. Is it a fake out candle? I don't know. It's too early to tell, but it is something to pay attention to because they have this correlation with one another. If this goes down, this goes up, S&P 500. So if this goes up, is the S&P 500 going to go down, or is it going to consolidate and rather be just a boring month? That's what we need to pay attention to. Now, I want to show the monthly time frame. Okay, the monthly time frame, this is long term. We pulled down into a previous area of support. You can see resistance, broke out, then acted as support. Here it's acting as support right now, for now. Okay, and I wanted to highlight every time that we see this price percent oscillator crossover, a bullish crossover, we see the dollar move. It's pretty darn accurate. Bam, right here, boom. And we see the histogram here moving more north towards zero here. From the negative territory to go into zero, which means that we could very well see a bullish crossover Does that mean we go back up to 100 and 102? I mean, this is a monthly time frame, folks, so keep in mind that this would suggest that we have a bullish crossover in some time in 2021 if this momentum continues. But as it stands right now, I mean, it could also just turn right back down. So I just wanted to call that out. Weekly time frame, this is a pretty dirty looking inverse head and shoulders, potentially. Okay, potentially. We saw something very similar over here. So potentially this holds, and this, if that is the case, be prepared because that can send ripple effects and all kinds of weird, crazy things that take place in the equity markets. Now, and even other assets, obviously. Falling wedge pattern, we broke out, came back down. Perhaps we start moving up. We got to see how the next week kind of rolls itself out, and go from there. But this is from a very weak looking candle to a very strong looking candle, I might add. Okay, so that's what I wanted to start off with. I wanted to start off letting everyone know that there's that correlation. And typically in the month of May, you see a strong dollar, and that could put pressure on various asset classes. Okay, let's hop into the market dashboard. How did the week perform? Relatively flat. Okay, we're looking at the 5-day here. This is just WSJ on the market section. You can pull this up too on a website. Industrial averages, it's just flat. But we know this because, we showed the daily stock market brief. It's been just this crazy sideways movement. One thing to pay attention to is KBW. That was up the most, 3.45% right there. So, and same with oil, and we'll get into both financials and energy. Because if we look actually at the S&P 500 sectors, the 11 sectors, look at what was leading the way. Energy and financials. Financials is important to pay attention to. Typically, when you see yields rise, that helps financials because banks, they borrow short-term and they lend long-term. So a higher yield typically means more margin, more money coming in for the banks. And I'll go right now to bonds and yields, okay? Just to kind of keep the flow of this going. This is a weekly perspective from the 30-year. I'll look at the 10 too. That could be very well a bull flag. And if that is a bull flag and we start breaking out higher, that will be interesting. We'll get into more detail on that, if that were the case. But we're up 2.2% on the 30-year yield this last week, and that's pretty solid looking. And same here, up 4.43% on the 10-year. And that was also flagging, so this could be breaking out of a bull flag, which means, hey, how high do we go? 1.9? 2? Man, and that could put pressure where? Okay, we've seen this correlation. Here it bottomed in August. Okay, the 10-year bottomed in August right here. Just so happens that gold topped in August. So if this starts to move up, that could continue to put pressure on gold, which could also mean put pressure on the miners. So we got to be very aware of that. And also tech. Tech has not liked a rising yield. So we'll see how that develops. So if we look at the TLH on the weekly time frame, we bounced from the 61.83 retracement level, came up, tagged the 50%. It's acting a little bit as resistance. And to note, the big spike in volume. It's not necessarily as big as some of the previous weeks, but that's a big spike in volume. And when we've gotten that from a daily perspective, these big spikes in volume, it typically resulted in more selling off. From what I've noticed on the daily time frame. I don't have the daily time frame in front of me, so you'd have to just pull up the chart yourself and be like, look at the daily volume and be like, oh yeah, wow, yeah, daily volume. And then all of a sudden, a few days later, it drops off. So something to just pay attention to, okay? Now, what else do I want to pay attention to? At the bottom of the chart right here, technology, right? We saw the yield rise. So that could have a very, very impactful correlation with one another, having tech there. And now we did have a huge earnings week, the biggest of the year. And what's a red flag to me going into May is this. Look at a company like AMD or Apple. Let's just talk about Apple. Okay, Apple, everyone knows about Apple, the darling, right? But the fact that it had blowout earnings and then gapped way up, but then the daily candle completely reversed itself. And even Amazon, that right there, it's not the greatest thing to see. You'd want it to actually finish, up 4% on the day, 5% on the day, or whatever it was when it opened up. But that to me is a little bit of a red flag, seeing some of these big companies, blow out the earnings, right? And then the price action suggests not the greatest stuff to take place, which is just interesting to me. So I'm not going to put too much weight onto it until we get into next week and start seeing how things take place. But just know that's one of the reasons and one of the ideals that are in kind of that in my head, thinking as to why May might just be a subtle pullback month or consolidation month. Still be very bullish, which we'll get into those indice charts. Let's look at the relative rotation. Here we still have, from a weekly perspective, XLRE is probably one of the more stronger ones from both a relative and an absolute performance, which means when I pull up their chart, we have a breakout candle taking place in XLRE. So real estate to me looks very good going into next week or the month of May. Like it will be a continuing strong performer relatively to the S&P 500 and the other sectors. So we'll continue to see how that plays out. Another one that I want to call out is XLI and XLB. We've been following these because they are still leading from a weekly relative performance from this relative performance chart. Couple things to also note: energy is continually weakening, and financials is also weakening. And financials typically, from a chart that I saw from Julius D. Kempner, he pointed out that the XLF, the financials, typically only perform better than the S&P 500 35% of the time in the month of May. And we're seeing this little pullback here, which is interesting. And we have energy weakening here a little bit too as well, although energy has had a significant pullback, but it still, to me, looks like one of those could be very strong performing sectors, but we just need a little bit more confirmation. Red flag on the screen. Take a look on the left-hand side. These little creepers over here, XLB and XLU, continually improving right here. Okay, these guys are just skyrocketing up over here. You know, I don't know if this is going to matter anytime soon, but if you remember from previous market briefs, I showed what this looks like as it moves into improving to leading, and it typically does it when we're about to roll over to when we are rolling over. So it's still back there and improving. It's still showing strength. That to me also suggests, okay, if we get that continued momentum and strength in XLP and XLU, which is typically more, you know, where people consider to be more risk off, that is also kind of going to this narrative, which is just a narrative, that the month of May doesn't look all too exciting, to be quite honest. Okay, we're gonna hop into the indices now. Let's go start with the S&P 500. Timestamps are going to be in the description below. Okay, here we go. S&P 500 monthly perspective. I want to just call out we're extended past the upper monthly Bollinger Band. Now this is interesting to me. Why? For example, Apple. Okay, this to me first. Okay, let me backtrack. S&P 500 on the monthly time frame, we're above the upper Bollinger Band. We're completely disconnected from the 5 EMA. Okay, that means to me that if you get big gap ups, typically professionals will probably sell into that strength and take their profits fast. And what I saw with Apple, AMD, you know, just a couple examples, they got a huge gap up, and guess what happened? Selling into strength. So that to me, like I said, is a little bit of a red flag. I want to reiterate this. This does not mean crash, okay? We'll show you the daily charts. It does not mean crash. Can it happen? Yes, of course, it can happen, but it's still extremely bullish context. This to me says be cautious and look for high quality setups, because if we do continue to rip higher, you want to be a part of that. Okay, where was I going? Here we go. Yeah, just extended past the monthly upper Bollinger Band. I have two red boxes on the screen. Why do I have two red boxes? Well, when we get past the upper monthly Bollinger Band, sometimes we do get retracements. Okay, nothing huge, nothing crazy, but we do. And what I want to call is these three bars and these three bars. They look very similar, right? So we have this little inverted hammer, then a big green strength candle, and then even a bigger follow through to extend past the upper Bollinger Band. And then we get a little bit more push higher, and then it retraces. Okay, we have an inverted hammer candle, big green bullish candle, followed by another big bullish green candle that extends past the upper Bollinger Band, and we're overextended. Does that mean that this is going to play out? No, I'm just looking, you know, this is fractal, I guess would be the word. Perhaps we do, because we do get extended off these big green candles and they reverse. Okay, perhaps we just consolidate. Perhaps we have an inside trading month. That's also a possibility. That's consolidation. That means nothing. It means that we consolidate and we can potentially rip higher sooner. Okay, from a weekly perspective, these charts look somewhat bearish, to be quite honest. They do. We had a rising wedge crack, rising wedge crack, rising wedge still looking fine. I put the VXX down here so you can see a falling wedge crack, falling wedge crack, falling wedge crack. And each time that it cracked, we saw volatility obviously fly through the roof, and we saw some big moves to the downside. Weekly candle, inverted hammer, shooting star, whatever. Just know that it was a big green candle. Then the bears stepped in and said, no, 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 and they pushed it back down. That to me is a reversal type candle, but it hasn't been confirmed yet. Okay, so that's something to pay attention to. Daily perspective, still riding this little line of resistance, grinding higher right over here. We have the price percent oscillator at a negative divergence and bearish crossover. Negative divergence there on the RSI as well. But pay attention to the moving averages. What do those tell you as far as context goes? That says bullish. We have the 200 sloping up, the 100 sloping up, the 50 sloping up, the 20 sloping up. But I will note that the bears once again gained control of the 5 EMA. Oh, Nelly. Okay, so what does this suggest? Well, obviously we could have a pullback, but do you really need to worry about a 3%, 4% correction, a 5%, even a 10% correction at this point? I mean, that's a big move to the downside, especially if individual stocks, but that won't wreck the structure of what's currently here. That to me would be healthy in this context to see something like that take place. And then we could prepare ourselves for a big opportunity. Let's look at the 15-minute time frame. This is more of a joke than anything, but you can see here all week. Look at this. Geez, this is just, what a lame week. Just up and down and choppity. Look at, for a week, we're basically here on, May, and we were like that here on the 23rd, 22nd, so we haven't gone anywhere. Okay, this day was really weird. I'm like, what is it? What is this? I don't remember seeing anything like this, but we gap up, completely rolled over, and then completely got it back, and then we gap back down, just leaving this big V here. And I was like, maybe it's the market telling us that volatility is on its way. So then I found this little symmetrical triangle here, and the VIX on a 15-minute time frame said, okay, if we squeeze above that, maybe that is it. We start cracking below that 416.50, and then we can head lower to around 411.50. That previous area right down here is support. So we'll continue to monitor this, but clearly support's holding right here. A lot of sideways chop, very boring price action. We'll continue to monitor how this develops and get into a little bit more detail as the week rolls out. Dow Jones, monthly time frame. I'm gonna move a little bit quicker here. Extended past the upper monthly Bollinger Band, completely disconnected from the 5 EMA. Same goes here as it did with the S&P 500 monthly time frame. Transports on the monthly time frame. This thing is insane. Vertical, boom. RSI, very frothy, trading above the upper Bollinger Band as well. So this means it's a, sell on strength type of environment right here. So you just need to be prepared for if we get a quick retracement back to the monthly 5 EMA. All right. Clearly, this was a lot of resistance at 11.5. If we ever see this roll over, be prepared to put in money at 11.5, 11,500, because that resistance, if it ever came back down there and tested that level, that could act as a very, very strong level of support to see a nice bounce from. But I'm not predicting that to take place here in May or forecasting that by any means. That's a significant drop in a very short period of time. That literally a big red monthly candle like that would look like this pandemic candle. I just don't see that taking place. Possible, but I just don't see it taking place. Weekly time frame for the Dow Jones. Still in this structurally pattern right here. The weekly 5 EMA is still holding here. We were down on the week, and the transports were actually, I don't have a weekly time frame of that, but I believe the transports were actually up on the week, which is interesting because if you understand Dow theory, where you look at the industrials and the transports, they do have to kind of move hand in hand. If you get these divergences between the two, you typically see them revert back to just basically moving back in motion or correlation with one another eventually. So if the industrials is dropping, but you see the transports continuing to rise, I would expect that the transports would potentially pull back down at some point. So we'll continue to kind of just see how that develops in the coming days. Dow Jones on the daily time frame, look at the moving averages. Context is king here. 200 sloping up, 100 sloping up, 50 sloping up, 20 sloping up, but the bears got control of the 5 EMA. Okay? Ooh, Nelly. So we'll continue to see how this develops, but just know that even a correction into this territory, you need to be ready to potentially buy into those dips, to hedge, long positions, create hedge longs if you're also selling into this sort of strength. Which if we start getting more aggressive pullbacks, I'll start mapping out more key levels. But as I see it right now, we're just going to pay attention to the moving averages until I see some sort of other development take place. 30-minute time frame. This to me is bears getting more into control. We have now a gap above us. Okay, resistance. And when I say bears getting in control, I mean they made a high here. We pushed them lower to that area of support. They pushed them lower again. So it's stair-stepping down, saying that, the bears are gaining strength. But the bulls are still holding up this 337, okay? We'll see if it breaks out to the upside. That could be very strong for the Dow. If it breaks down, that could be very strong for the bears. And then it could push lower to potentially close in some of these gaps that's still below us. So still structurally within this pattern. We'll continue to monitor that. Nasdaq, we're going to just look at the daily time frame. Chopping side, just a complete chop fest. Okay, big gap down. Came back, filled the gap, and then we came back down and closed lower. The bears have control of the 5 EMA here, and we're sitting right there on the 20-day moving average. The immediate risk to the downside is right around 335 for support. That was a previous support, but if we continue moving down there, we're in this kind of zone here from 315 to 325. That can be a very strong area of support for the Nasdaq. We're looking actually at the Qs right here, which is the QQQ trust. For Nasdaq, and we're going to look at semiconductors too as well. Semiconductors make up a big portion of the Nasdaq, and as you can see here from a weekly time frame, look at those moving averages, just nice spread between all of them, and they're all sloping up, stacked up in the right direction. I will say that the bears here from a weekly perspective got control of the 5 EMA, so this is, to me, says, okay, where can we buy into a potential pullback? And I would say right around the 20-day weekly moving average, which is at 412 right now, but that will probably uptick slightly coming into Monday. So we'll continue to see where that kind of goes. Just be very cautious here. We do have what I thought was interesting was a lot of increased volume here at a top, which could be a potential top, I should say. It's more of a consolidation or distribution phase. But also when we get these like moves to the downside, you see increased volume, and that presents a turning point. Same with right here, you saw this increased volume and it presented a turning point as well. So perhaps all this volume right in here, this distribution, this fight, this decisions going back between the bulls and bears, supply, demand, perhaps this is a turning point as well. But we just need to watch out for key levels to break if that is the case. Price percent oscillator and the RSI both sloping down and have a negative divergence there as well. Let's look at the Russell 2000 weekly time frame. We didn't quite come grab that the monthly 5 EMA. That would have been a good opportunity to buy. That's what I was waiting for. It didn't come. It pulled down to a low of 215, so it was pretty close by $5. So if you did catch that, awesome. We were posting about that on the 30-minute time frame there on Twitter. Is this an exhaustion break like it was over here and here? It's still a possibility. We are above the upper monthly Bollinger Band, and also we're pretty disconnected from the 5 EMA, but yet nothing's been confirmed, so it's still very, very bullish looking at it from this specific context until further notice. Weekly time frame, I just drew out this, look how steep this trend line is right here, and then you can see this chop back and forth, just could be distribution phase where we head lower. The weekly candle does not look all that good. Price percent oscillators crossed over, right? Bearish crossover. It's sloping lower, suggesting that momentum is dying out here, which is not good. If we start cracking through this trend line, perhaps that means we're going to go ahead lower. Now, 20% of the IWM holdings is financials. So, if financials do continue to see strength, I think that we'll see IWM to have strength. But remember what I said, from the month of May, only 35% of the time financials outperforms the S&P 500, but yields do look like they're breaking out of a bull flag. If yields head higher, I think that's going to be good for financials, including, if you haven't looked, Canadian banks, surprisingly, are doing exceptionally well. Even some European banks are doing very, very well too. IWM on the daily time frame. We got a little bit of a fake out sort of move here. We had some strength come in, and then we had weakness come in these last couple of days. Showed up on the daily time frame, down 1.36% on Friday. Overall, though, we're still above the 50-day moving average and 20-day moving average. So we'll continue to kind of see how this monitors and develops. I still think that there's a potential opportunity for more upside to come here, but this also could be a big rounding out pattern. It could be an advanced head and shoulder pattern still. It's still within the context of that, and we still have this area of support holding. Overall context of the chart, though, still very bullish. I don't see a specific trade at this given time, though, with the IWM, so I'll continue to monitor that to see if that changes, because it could change quick. Now let's hop into some stock market indicators. Okay, remember, we started this off talking about a forecast for the month of May. As it stands in my head, it just seems to me like it's going to be a pretty calm month overall, or we might get, a subtle pullback. To me, because of all the current context that we're going over. But keep in mind, you just need to be bullish in this environment. Unfortunately, if you're very bearish, just pay attention to the chart because the chart is saying be bullish, but just be cautious. Let's go into some indicators. I want to pull out the sell signal. I use this as a sell signal. On occasion, it's more of just like a warning thing. Just, hey, be careful if this 10-day moving average crosses above 0.8. It's still not there yet. I just wanted to show you that it's pointing upward, which means that we could see weakness if it gets above it. Now, I want to call out the purple line in the background. That is the CPC. That's the put to call ratio. We had a big spike. We haven't seen that big of a spike since March, really. Early March or late February. So that to me says if we get up into these levels, the 10-day moving average is going to continue to move up, which tells me, okay, this could be, an early sign of the whole sell in May, go away, which once again, sell in May, go away doesn't mean that there's a market crash. Okay, doesn't mean that. It means that it could be a very boring time in May. So take a vacation, take a break, all right? And then come back when the market's ready to start performing again. Because from a seasonality perspective, it's relatively a pretty calm month. Okay, so let's continue. BP NDX, negative divergence right here. It is still playing out. Notice the higher high right here in the BP reading, lower in the RSI. So perhaps we have more room to go lower. We called that out before, this took place, and we can see it's currently playing out there on the RSI. So we'll see how that develops. Got a lot of negative divergences taking place. Right here on the NI high-low, the NYSE high-low index, also a high to a lower high, high to another lower high. You can see here it's been just cranking up higher and higher. So perhaps we get a pullback down to the lower range of this channel. Very big possibility there. Same thing goes with the NYMO, breath. Down on the day, down on Friday, I should say, we had a negative divergence building still continuing here as the market continues to press up and up and up and up. Very frustrating if you are a bear waiting for a pullback, as there has not been any pullbacks, or a bull waiting for a pullback, I should say, because a lot of bulls now are saying, okay, we need a pullback. Come on, let's get an entry point at some time. Very similar to what took place here going into 2020, just a constant drag higher, and then all of a sudden we had that rip. Same with the null, new high, new lows, had that negative divergence there in January to February, right? Boom, 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 and then you see the lower highs here taking place as we continue to press higher on the NDX. NDX right now is in this period of consolidation. I think if we start cracking below that period of consolidation, then we can head lower. We'll talk about that when it comes or if it comes. Here's the percent of stocks above the 200-day moving average in the Nasdaq. Wanted to call out, we've seen negative divergences both here in 2020, right before this sell-off. We saw it right here, and now we're seeing it again, okay? So this, to me, can get resolved, but pay attention. It is a negative divergence right here. Same thing goes with the S&P 500, percent of stocks above the 200-day moving average. We saw that here. Boom. And what I mean is the stock market went higher, the internals went lower. That suggests internal weakness. That's how you can read this. Same thing goes right here. Very smaller though. Stock market headed higher, internals went down, but still, that's still a high reading. Okay, that's a very high reading, 94.79. And typically when you get high readings like this, it doesn't stay there for long, but it has been staying there for long. Let's look at some sentiment. We're gonna look at the bulls to bears ratio down here. We called out this last week, slight divergence here, and we saw the pullback. So just headed a little bit lower. It's not nearly as overextended. As far as the bulls to bears surveys go, we saw a subtle move to the downside as well, and we saw a little bit more bearish activity pick up. Still on the S&P 500, you can see a little shooting star candle. So I don't know, nothing crazy right here. Still bullish in the most part, but this does suggest, okay, perhaps going into May, we're a little bit less bullish than we were previously. As far as the NIM exposure index, what are asset managers doing? And then also you're looking at the RIDEX. RIDEX is full bull mode still, and then also the NIM is full bull mode. They're above 100 print, which means they're using leverage long, which tells me this: if there is downside risk, this will get moved very quickly to the downside, which we've seen previously. So if they're fully long and they're even using leverage long, that leaves a lot of risk to the other side of the trade, which means that if we do see weakness in May and some selling takes place, you're going to have a lot of shifting, a lot of selling, and increased volume to potentially make that move more dramatic than typical. So something to kind of just keep an eye on there. Let's look at some commodities here. Gold still within this channel, saw subtle weakness there on the week, down $10.10, which is not even a percent down. Every time it comes to the upper portion of this channel, it kind of reverses itself. So let's continue to see how this plays out heading into the following week. Like I said, if the 10-year yield continues to press higher, I think that we're just going to get rejected right here and head right back down to 1692. That'd be a very, very big possibility. However, to keep in mind, it does look very similar. It correlates really well with the 10-year. However, it correlates even better to the real yield. Not just the nominal that we show on the 10-year, but the real yield. So if inflation continues to press higher and the 10-year, and it outpaces the 10-year, that means that the real yield would be kind of running hotter, which we've seen in the 70s, right? The 10-year went up and we saw gold go up with it. So it's still possible that even if the 10-year goes up, gold can go up too, just the rate of inflation has to outpace that. And that's a very strong possibility that will happen here in the near future as the Fed is targeting higher inflation. Here's silver. It's not doing anything for weeks. Nothing to really report here. Still within this channel. Nothing going on here. Let's see if it starts breaking down through the 50-week moving average. You can go test the 200-day weekly moving EMA. Oh my gosh, I'm so confused here. I have the wrong color set. So it's sitting on the 20 EMA, which is at 25.62. Below it is the 50 EMA, 23.93. If we get below the 20, it can go test the 50 quite easily. If it starts breaking above the previous high of this week and the previous week, which is right at around 26.58, I think that gives us a strong move to around 28 to 29 to go retest this resistance up here. So we'll continue to see how that plays out. As far as crude oil goes, strong week, up 2.32%. Getting some strength, but we did get a little candle rejection back at this area of resistance. Look, if oil gets above this 65 to 66 range right here, this previous swing high, 67.50, I think that it can just easily crank to 75 without a doubt. That would be the previous swing high over here in late 2018. And it's building, it's flagging, consolidating. The moving average here, the 20 EMAs continue to drag higher here. So this looks pretty strong so far, in my opinion. The price percent oscillators crossed down just slightly. So we'll continue to see how that develops. But just so you know, if we start cracking above this and start heading higher, get ready to be in some energy stocks because we can see some huge gains in various energy stocks if oil starts breaking out of this range to head to $75 a barrel. That'd be pretty crazy. Here's the CRB index. This is skyrocketing too as well. Continuing pressing higher and higher. We had a high of 202.41. I think main resistance is right around 205. So maybe we perhaps take a little break around 205. But who knows at this point? We had a huge move here, consolidated, broke out. Huge move, consolidated. Now we're breaking out again. So yeah, inflation's not real, right? Apparently. All right. Now I want to talk about the German DAX. The reason why I'm talking about this is one of my patrons said, hey, can you bring in the German DAX? It's something that we pay attention to here. I know in America, we pay attention heavily to the U.S. markets. So let's bring in the German DAX. Okay, why the German DAX? Why is this actually more important than, say, China markets? Well, this looks confusing. This is something that I learned from very, very accomplished technical analysis technician, Tom Bowley. I think I pronounced his last name right, but why would we pay attention to the German DAX? Well, first off, this is a bunch of correlation charts, okay? Correlations just to the S&P 500. So what has the strongest correlation? Is it over, well, actually, let me see how I can do this. I put European and Asian countries here. So we're down here, these bottom three. We have the SSEC, we have HSI, the Hang Seng, and then we have the Nikkei down here too as well. You can see the correlation here is, they're heading down, okay? You can see the lines pointing down and they're kind of choppy back and forth. Whereas the two up here, we're looking at France, and we're looking at, which is the CAC, and then the DAX, the German DAX. You can see long-term positive correlations above the zero line. So really, it's important to pay attention to, in my eyes, looking at this chart, European countries versus the Asian countries, because of the correlation to the S&P 500. So that says to me, hey, pay attention what's going on in Europe, because if something's taking place in Europe that we don't know that's going on here in America, or if we look at their markets and they start rolling over, okay, maybe we should just press the brakes a little bit, because we might see something like that here take place in the broad market index here in America too as well. So I wanted to call out the CAC and then also the DAX, and we're going to talk more about the DAX right here. Look at this is the German DAX down here. We broke out of clearly resistance right around 2017, a 3-year, 4-year resistance. Okay, resistance. We broke above. We saw this big move to the upside. Correlation to the S&P 500 looks great. Okay, what I want to call out here to pay attention to is the last 2 weeks, the German DAX has slightly been rolling over. S&P 500 has been moving higher, which suggests to me, potentially, is also adds to another element of why May might be a slow month. Is we're seeing the European country, German, moving down, and we see S&P 500 grinding higher, but the weekly candle's not that great. Does that mean for sure it's going to sell off or consolidate, or does that mean for sure that it can't go higher? No, but it's something to pay attention to. All right? So perhaps this is an early sign of something. We don't know for sure, but pay attention. Overall context is very bullish. If the German DAX came down to 13,500, be prepared, to trade, because that is some strong support down in that area, especially, looking back, 3 years, and it clearly tested as resistance a bunch of times. I don't know if it's going to come back down like that, but if it does, just be prepared. I don't think that's going to be the case here in May by any means, but just note, even throughout the rest of the year, that can set up for a very, very excellent trade. All right, everybody. That's all I got for you on this weekly recap / monthly recap episode. We talked about a lot, but really, I hope that I kind of explained as to why, I'm bullish, but I'm bullishly cautious. I'm going to be setting and looking for long setups to take advantage if the market wants to continue to press higher, but I'm going to be very, very diligent in managing risk during this environment, because from a monthly perspective, we're extended. Also, we're pulling into a seasonality, or to a month. We're based off of seasonality. It's not the greatest. And then when you look at the dollar, which has this very strong correlation to the S&P 500, May is a typically strong month for the dollar. And if May is a strong month for the dollar, and we see this correlation here where if the dollar gets weaker, S&P 500 gets stronger, well, if the dollar gets stronger, does that mean the equities are going to be weaker? It's a strong possibility. So we need to be prepared for that environment if that were to come. Hope that helps. See you all later.